And energy under some pressure this morning. Reports indicating OPEC Plus discussing an output hike in July. Carlyle's chief strategy officer of energy pathways joins us now. He's Jeff Currie. Jeff, good to see you. They're talking about what the IEA discovered that there's some missing oil demand, I guess. What's going on here?
Yeah, just a little bit, like 300 million barrels over 3 years. And I think the key point there is, the surplus that everybody's been waiting for and trying to price in today never materializes. This market continues to drift higher despite the fact that you have so much bearish rhetoric around OPEC. Oil is the one asset that has not returned to pre-Liberation Day levels. It was at 75 pre-Liberation Days, trading 65 right now. I wouldn't be surprised we move back up into those pre-Liberation Day levels. Why? If you look at the increase in OPEC exports, they have not gone up, they have gone down. So despite the fact that they've raised production now 800,000 barrels per day in terms of the quotas, the actual exports in the markets have gone down. Inventories are low. Refining margins are very strong right now. Market is short. That's a recipe for a market potentially moving higher.
All right. Back in March, I think you put out a long piece in which you said peak oil has already arrived as a peak trade. What do we make of that trade right now?
When we look at, the situation around oil moving, you look at China. China is not increasing its exports from around 12 million barrels per day for quite some time. And so what we argue is that the tradable oil moving around the world is going to be constrained. It doesn't mean we're bearish oil, but what we argue is that the restrictions around wanting to consume oil for security reasons in places like China are going to remain high. Now, that does not apply to India. So we still see demand growth coming out of places like India, but places like China, you've likely seen peak oil trade. And so when people argue, going back 20, 30 years ago, peak oil was, we're going to run out of oil. And then peak oil became peak demand, meaning that we have too much of it and we need to restrict it for issues around climate change. Now the concern around actually, can I get my hands on that oil? And peak oil now means peak trade.
Yeah. Obviously, China does continue to ramp up its growth in renewables and nuclear, but not the case here at all. Speaking of which, what are your expectations in terms of U.S. production, given we're still the largest in the world, but at current levels, there are certainly some questions as to how much money the industry wants to continue to invest in terms of getting more out.
Well, at this point, you look at drilling, it's back down on its lows. I think the biggest thing that OPEC has achieved with these big increases in expected production is that drilling is off in the U.S. And you had Diamondback last week capitulate, arguing, hey, they're cutting CapEx, production's beginning to roll over. The weekly data show it stabilizing, a little above 13 million barrels per day, is around 13.3 most recently. All of this points to, hey, that rapid growth in production that we saw a few years ago is not continuing on. And I think more importantly, we take a bigger, longer-term picture, is on the eve of COVID, U.S. production peaked around 13 million barrels per day. It's 13.3 today. It went down, it came back up. So its ability to get too far above 13 is relatively limited. Now you have drilling off, inventories are low, demand remains strong. That's why, again, I'm going to point at the risk of really shifting to the upside in a market that is short, and it's tried to price in this big surplus spare market further out on the curve. And the one thing I say is, if every time the market tries to fade the front end tightness, it gets in trouble. Like I say, don't join the party until the party started. So that bear party, it hasn't started. I'd cautious, trying to join that bear party today.
All right. Well, we'll be watching, and we'll have you back and see how you did. Jeff, always appreciate it. Thank you.